So what's going to happen after the new governor of the Bank of England, Mark Carney, arrives? Will there be more of the policy known as QE, that's electronic money creation? Vicky Redwood of Capital Economics, what do you think will happen?
Well, I think when he arrives, his first thing will be to introduce some sort of commitment to keeping interest rates low, probably until he sees signs that the economy or the labour market is starting to show a much more significant improvement. And the aim will be to say, essentially, we're going to keep interest rates at their record low levels for another 2, 3, maybe even longer years. There's also a chance he comes in and tries to persuade the rest of the committee to resume this money creation that they've paused for the last few months.
But we've had 6 members of the committee voting against more quantitative easing, 3 including Mervyn King voting for. What would make those 6 change their mind? And wouldn't Mr Carney be in a minority?
Well, I think some it will be very difficult to change their minds. Others sound like if the economic data starts to weaken a bit, if the recovery doesn't look quite so strong in a month or two's time, then maybe they could be persuaded to agree to more stimulus to try to get that recovery back on track.
Stephen Saywell of BNP Paribas, what's your assumption about Mr Carney's game plan?
Well, we tend to agree that we think the likelihood is that he'll be more activist than his predecessor. And I think what that means is he is more likely to do more printing of money when he arrives in July. We think the most likely timing for that is August. And we would also highlight the 2 factors that are likely to drive this decision. Is firstly, inflation is declining. Even though we saw a pickup this week, we think it's temporary. So this allows him to print more money from an inflationary perspective. But secondly, and the main point I'd highlight, is growth here. We talk about escape velocity in financial markets. And what this means is that growth is strong enough to come out of the recessionary tendencies. And we would characterise UK growth as doing okay, but not strong enough. I think the new Governor Carney would like to see stronger growth, and we think he's going to try and make it happen.
Now, there have been major falls in global share prices because of markets trying to guess what's going to happen in the US, and a strong hint from Ben Bernanke, the Fed chairman there, that QE will be eased back. What do you make of all that?
Well, we got a huge hint this week from the Fed chairman, Ben Bernanke, that he is likely to start to wind down so-called QE later this year. And that's caused a lot of uncertainty in financial markets, particularly actually in emerging markets, so outside of the US, outside of Europe. There's been a strong, shall we say, exit, investors wanting to take money out of those markets and repatriating it largely to the United States. I think the key point I would make here is it could be interesting if the UK starts to increase its printing of money or quantitative easing at a time when the US is slowing it down. That could have quite significant impacts on financial markets in the UK relative to the United States.
Vicky, how do you see UK growth? Is it possible there'll be enough positive news to mean that further stimulus in the UK, more QE, is not necessary?
I think if the recovery continues to regain momentum, as it has been doing in the last couple of months, then we might possibly get to a situation where Mr Carney and the rest of the committee think that they don't need to do anything more. I think that's unlikely. I think given the constraints that we've still got on the recovery, so households' real incomes are still falling, the Eurozone, the main destination for our exports, is still in recession. Given those factors, and the fact, of course, that we've still got a lot of public sector cuts going on, I don't think we can get that momentum going, and that's why I think that policymakers will have to do a bit more.
And is there an issue here about the pound? It could be a covert way of just trying to weaken the pound to boost growth, if you go ahead with that.
Yes, it's difficult for policymakers, for the Bank of England to come out and try to deliberately target the pound. But some people think that maybe a further fall in the currency, British currency, is what we need in order to try to make our exports more competitive. Because so far, we had that big drop in the pound, but it really isn't giving the boost to exports that people were hoping for.
Stephen, briefly, I mean, is there going to be a lot more uncertainty and turmoil on world markets while everyone tries to work out how economies try to get back to normal?
I think there probably will be, particularly in emerging markets. As the US winds down its quantitative easing program, I think the US dollar will rebound, other currencies will be weaker. We think the pound will be one of those currencies that is likely to be weaker if we see more printing of money from the Bank of England.
Stephen, Vicky, thanks very much.